Hello, this is CMXtra, the Capital Markets Exchange podcast. Welcome or welcome back, whether you joined us for the previous episodes of the podcast earlier in the year, our most recent episode on dealer wallet share, or were in London for the inaugural in-person event. You're all very welcome to the CMX universe. A reminder that we've lined up a diverse array of conversations with experts from throughout the capital markets community. Everything from mastering syndication and issuance to how to survive market blackouts. They're all on the agenda here on the podcast. But if there's a topic you'd like us to cover, either on the podcast or at an event, then, well, do get in touch. Find us at the CMX on LinkedIn. Here today, though, we're all about showcasing desk power. In the current financial landscape, heightened market volatility, increased regulatory scrutiny, and rapid technological advancements have all conspired to make trading more challenging. What's more, geopolitical tensions and economic uncertainties have led to unpredictable market movements, making it difficult for trading teams to execute strategies with precision. Add to that, of course, intensified competition thanks to algorithmic trading and artificial intelligence, and it's clear that traders are under more pressure to adapt quickly and demonstrate value add than ever before. Joining us today are two guests with a rich understanding of the context and challenges that traders face today, and with a wealth of quick wins and strategies, we hope, to help desks realize and demonstrate value. So joining us are senior trader for currency solutions at Insight Investments, Rich Turner. Hello, Rich.
Hello, how are you?
I'm good, thank you. I hope you are too. And also joining us, we have Global Head of Fixed Income Trading at Invesco, Ray Uy. Hello, Ray. How are you doing?
Hey, David. How are you?
I'm good. Thank you for both joining us here on today's show. And as an opener, an icebreaker, I guess, let's do some introductions. And Rich, I'll come to you first of all. Give us 30 seconds on who you are and what responsibilities you have where you are, along with an answer to this question. Are you an alpha contributor or a cost center, and why? Take it away, Rich.
I'm Rich Turner, Insight Investment. Been a trader here for 20 years in FX. We trade electronically using algorithms, and I certainly think that we do add alpha to the whole process.
The last bit of that is why. You are very adamant that you do. I guess my question is to what extent would everybody where you work agree with that?
Well, I think the stakeholders we have here, there's always a two-way conversation between the stakeholders who are driving orders and us who are executing the orders in the marketplace. But I think to answer the question why, the fact we have that conversation mean that we are trying to impact the alpha in the decision making and the trades that we're trying to do. So I think part and parcel of that whole communication is the fact that we do add to the alpha.
Very good, thank you. Same question to you, Ray, just a bit about you and where you work and what responsibility you have there. And that same, are you an alpha contributor or a cost center? And would others agree with your view?
Yes, so thanks, David. So Ray Uy, I've been with Invesco for the past 12 years. Currently, I am head of our global fixed income, currency, and commodity trading desk. I've been in the industry for 30 years, mostly in the global macro space, and emphatically within fixed income and FX, our desk definitely adds alpha. And I guess the reason I would say that is because within OTC markets, trading desks are a much more integrated part of the investment process and are likely to be embedded in sort of that investment process on a day-to-day basis, communicating with our portfolio managers to generate the best outcomes for clients.
Yeah, the extent to which desks in different shops are embedded or not. I know we're going to come on to that in just a moment, but Ray, do you feel as though, given how you're positioned and how you're organized, there is a job that you need to do in terms of promoting, in terms of acting as an internal champion for your desk, or are things so well integrated, so well communicated there that actually performance speaks for itself?
No, I wish it did. I think the active dialogue and lines of communication are an essential feature for a well-functioning desk. And certainly that's something that my team in partnership with our investment teams, work very hard at ensuring is operating at an optimal level.
So given how you're set up there, Ray, do you find that you kind of don't really have to promote what it is that you do, that you don't need to go on that kind of internal selling piece because the performance speaks for itself, or is there still a job to do there?
Yeah, no, there's still definitely a job to do, and I think the advocacy for the desk is a consistent feature of my job, but not something that is overtly explicit. I think, the trading desk functions as a conduit more so. The value is in being a good conduit as opposed to the actual execution, and so I think you can tell the level of efficiency that you're operating with just by the level of dialogue across your teams and the portfolio managers.
Same to you, Rich. Is promoting and being that internal champion for your trading desk something that you have to work hard at where you are?
I think it's something that we historically haven't done very well. And so I think really it's, part of my modus operandi is to wave the flag about, what it is we do and, show when we, what we do is intricate and there are skills to it. So I think it's very important that we do wave the flag, as it were.
And what is your flag waving technique? How do you best go and let stakeholders, let the rest of the business know how well you are performing? Is this just a case of going and giving presentations? Is it a case of getting some data and really demonstrating the value in various ways?
Yeah, I think the most important thing is to have we have a very open plan office here, but it's most important that anybody is welcome to come and sit by your side as you're doing your job. So I think that's definitely one of the most important things, is to being always open to approaches and also being transparent and very, very open. But again, to your point, yes, there is a degree where it is about perhaps getting people in the room and showing them what it is you do. But with the best will in the world, the best place to see it is at the coalface, which is at my desk.
And Ray, you spoke about your setup there being pretty well integrated, but based on your experience outside of that setup, there are some real challenges, are there not, between being integrated with PMs versus having centralized desks? Can you chat us through what they are?
Sure. I think if you were in a purely active shop, and generally this is the historical structure of most trading desks, traders were embedded within the investment teams that they serviced, generally because most of the investment strategies and to that extent, desks by extension, were largely organized around market sectors. And so your traders had a specialty that aligned with the investment teams that they served. And so they were naturally embedded within that structure or part of that structure. As asset managers have grown and become more diverse in the types of mandates that they manage for their clients, centralized structures came more into prominence. And especially for us, we have a fairly broad and diverse set of portfolios that the desk services, ranging from all the flavors from passive to complicated active strategies. So we need to hit that sweet spot in terms of having a centralized organizational structure, but having a more flexible functional structure. And for some of my team, we sit together and it's a centralized pod that sits exclusively within our areas of the trading area of the floor, whereas other members of my team are more embedded and integrated with the portfolio managers that they work with the most, and those tend to be all on the active side. And so that's trying to centralize because you want to adapt the operational scale and efficiency of the platform, but still you need to recognize that there are some functional elements that you just can't get away from, given the importance of communication and the point that Rich and I raised at the outset, whereby I think for fixed income and currency trading, that trading is sort of an embedded part of the investment process.
And in terms of when it comes to demonstrating the value to stakeholders who need to see that. The analytics piece behind that, Ray, you know, it's the saying goes, there are lies, there are damn lies, and then there are statistics. To what extent do you use data and analytics to demonstrate the value add, and what are the potential pitfalls that shops can fall into when they do that?
Yeah, so that's a great question, and I would say I think from a sort of pure analytic perspective, the area that we utilize it the most is probably just TCA, and for a whole host of reasons related to governance and other regulatory requirements, that tends to be the area where I would say, are most analytically heavy, and I don't think it's I haven't found, I should say, a great framework for adapting a quantitative or analytical framework to quantify alpha for your trading desk contribution. I personally think that most of those structures can lead to a misalignment of incentives and incentivize people to game the system. And at the end of the day, especially for active mandates, really what's most critical is ensuring that you're able to execute and establish the exposure that you want for your portfolios. Adding another layer of complexity or execution phase to carve out alpha is probably not as valuable as sort of the overall investment objective. And so that's kind of where we sit on that. Candidly, I think the other bit that probably makes more sense to deploy your analytical firepower is within pre-trade market intelligence. So I'll leave it there.
Okay, Rich, over to you on the analytics piece. Among the concerns that Ray has there is about marking your own homework and a skewed view of the data. What's your take?
Well, I think the first thing, and we're very active about this, is keeping things very transparent. So effectively we're not marking our homework. So I think if you're keeping the data transparent around the TCA, then it's for everybody to see. And we have a separate team here that looking at the data analytics, who sit very far away from us. So they come to us and say, this is what we found. What do you make of this? So we take this decision making away from us, as it were, around whether or not something looks good. But I think the other thing to bear in mind is that you need different benchmarks for different strategies. So a passive strategy and an active strategy will have very different approaches. And so I think that's very, very important, is picking the appropriate benchmarks for the strategy you're taking on board. And I think as explaining and looking at things and explaining to people from the outside of trading, sometimes within trading, we talk a foreign language, and it's very hard for people to understand what the heck it is we're talking about. So invariably what we try and do is keep things very simple so that we can explain what it is and what we do to other people within the organization. I think that's a very, very important thing as well, because one of the pitfalls, as you alluded to, is the fact that you could have reams and reams of data that you analyze to the nth degree and just come up with a very, very confusing chart of sorts. So it's about keeping things simple.
On the quantitative side, obviously, data really, really important. Is there anything that you take in from the qualitative side here as well that you feed into performance management?
Yes, I think Ray alluded to it. He was talking about, before the trade arrives, have you done your analytics of what's going on? And, the same trade could arrive on your desk 5 times and the market could be in a very, very different very, very different environment. As the world stands nowadays with everything so electronic, the noise, as it were, that you used to hear about when lots of flows going through the market isn't there anymore. So invariably, up until the point you actually hit go or start to trade, you don't know what the market is going to look like, but you can use your intuition and your qualitative approach to sort of get an idea of what state the market is in.
And Ray, any builds on what Rich was saying from that qualitative as well as the quantitative approach? And I guess as we try to understand if it is possible to put a dollar value on the alpha generation from your desks.
I think the value add, or specific to your question on the quantitative and qualitative, it's really more about a process than a pinpoint number. Facts and circumstances can kind of dictate how outcomes are perceived or your performance is evaluated. I think one of the hallmarks qualitatively that I like to observe is if you have a desk that brings value and your traders are operating at a high level, you tend to see a lot of traffic by the portfolio managers to your area, right? I think there's that natural process of your team being sought out for consultation for a whole host of portfolio items, whether that's an assessment of market conditions, whether that's help in structuring a trade or the best way to structure a trade or a strategy and those type of things. And so you can sort of, the frequency of traffic tends to be a pretty good hallmark of just how well your team's doing, in my opinion.
Okay. So again, we've spoken about the different ways in which you can have desks that are centralized, you can have desks that and traders who are very much integrated within the investment process. And again, different members of our audience today will have different experiences of all of those. But based, Rich, on your experiences, both where you are and also in your peer group, in terms of the ways in which you can heighten engagement in the investment process, what are the ways that you've seen it work successfully to involve traders at the trading desk in the investment process, make sure that they just aren't part of the execution, but there's a feedback loop there that enables them to add maximum value right from the beginning, right through to the end, and then feed back into the beginning next time around again?
Yeah, so I think part and parcel of the answer to the question is being flexible. Some days, for example, we have a discretionary trader. Some days he wants some input into what he's about to do. Other days it's just, let's please just get this done. And there's no conversation. But I think, again, we have quantitative strategies that, we're involved with. And sometimes those quantitative strategies need some sort of input, which will be done on a holistic basis over, say, a 3-month to 6-month period or even a year long. So it's changing your approach changing your approach and knowing the stakeholder that is being involved in sending the order to the trading desk and working out when it's appropriate for you to involve yourself in that whole process and when not to.
And same to you, Ray, in terms of making sure, depending upon how you're set up, but I guess a best piece of advice to make sure that the traders are as integrated, are as involved, and have the opportunity to add as much value as they are able to into the end-to-end process. What would you say?
Yeah, so I think we can divide that question along 2 dimensions. To Rich's point, I think for the areas of our operations that are related to more passive strategies, we organize our workflows very systematically, right? So that we can be very efficient and handle a lot of volumes seamlessly, leveraging all of the trading technology at our disposal. The other side, in terms of handling active portfolio mandates, a couple of key things that I think make a huge difference is, number one, the traders need to understand the portfolios that they're servicing, the sort of the objectives, risk tolerances, much in the same way that the portfolio manager does, right? So understanding the client needs and objectives and guidelines is critical. A second feature that I think is very important, and certainly one that isn't necessarily controlled by the trading team, depending on the organization, is participation in investment meetings. I certainly encourage my team to the extent that it's feasible in their day-to-day to be involved in the regular cycle of investment strategy meetings that fixed income investors have. And I think that allows them, to glean insights into how the portfolio managers are thinking about it, how we're thinking about risk at the macro level and asset allocation, but then also gives them a forum to demonstrate their expertise, their insights, and sort of increase or strengthen the bonds between traders and portfolio managers.
And I think that all comes back to the way of looking at it that traders are the eyes and ears of the market for portfolio managers, aren't they? They are there on the front line, and that's and with that insight, with that horizon scanning, that near and long view, there's definite value that they can add there. Rich, just as we start to wrap up, we've spoke about the challenges that traders are facing, and whether it's geopolitical this or all the rest of the market instability that everyone in all markets are facing right now, and what that means for traders. What do you see as I guess the biggest near-term challenge, and what it is that you are trying to do to make sure that traders are continuing, as a leader in this space? What's your top thing that you're trying to do at the moment to ensure that traders are able to continue to add most value? I mean, it sounds as though you've got it pretty much sorted. You've got a very good stable platform there as it is, but clearly there are challenges out there. So what are you doing to ensure that this positive outcome continues?
Yeah, so front and center, Insight Investment is our, policy around best execution and making sure we're getting the best results for all of our clients and satisfying all the regulatory needs. So I think that's very front and center. But I think in all of the things that we do, and this is regarding actually trading, communication with people, discussions, it is all what boils down to having a process for everything that comes across our desk, and not just having a process, but having a process that has a feedback loop, so that when things change, the world changes very quickly. We're open to the process of change as well. So I think that's very important, is that you have the processes and you're very open to the process of change as well.
And those changes, we spoke earlier on about technological changes and the world becoming more and more algorithmified, more algo, more AI, and all of that sort of stuff. Those changes, I guess you prepare. You don't know what is around the corner, but as long, to your point, as you've got some processes that will enable you to understand, to analyze what this may mean, then you've got a process for dealing with the change, whatever it is.
Yes, 100%.
And Ray, same to you. Again, you have a very mature, pragmatic approach where you are. But in terms of the challenges, the known unknowns, and maybe the unknown unknowns, how do you best prepare yourself for those challenges, you and your teams, for those challenges, and make sure that you are able to continue to demonstrate value, to add the value as well?
Echoing sort of Rich's sentiment, I think it's critical that your platform is able to integrate and adapt to the changes that technology and the abundance of data has brought forth into the market structure and into the workflows in the space. But one of the key things that I think is really important is, despite all of the advancements in quantitative methods, technology and the market structure, while that requires increasing levels of analytical literacy from your trading team, at the end of the day, the function itself is still one that's relationship driven, both internal and external. And I think without having a very well established muscle around communication and relationship building, it makes the other aspects of the job harder to implement effectively, in my opinion.
Our relationships, given the different ways in which we're working, given the different ways in which we're engaging with technology in order to execute on our work, are those relationships that maybe we once took for granted now something that we have to work more consciously to enable and to develop in order to enable the kind of smooth flow that you speak of there, Ray?
Yeah, I think at the core, having great relationships, or being able to establish good relationships and lines of communication with external and internal constituents, are table stakes really for having a well-functioning operation as a trading desk.
Thank you. I tell you what, we'll leave it there for now. And this whole thing about relationships, this is a constant theme, no matter whether we're talking about technology or leadership or high performance, and the ways in which technology is changing the nature of the relationships that we have with team members. But like I say, we'll come back to that another time. But we'll leave it there for now. Rich, Ray, thank you very much for joining us.
Thank you.
And a reminder that you can catch up with our previous episodes on AI in trading, leadership and culture, dealer wallet share, all of that good stuff, and more wherever you found this episode. And also you can find it on thecmx.com. That's the-cmx.com, as well as in all the normal places where you'll find your podcasts. And if you like what you've heard today, then, well, share it with your colleagues. Leave us feedback. The CMX page on LinkedIn is a great place for that. And while you're there, perhaps tell us what you'd like us to cover in future. And speaking of the future, some Finance Hive in-person dates for your diary in Q4 24. November 14th is the Fixed Income Hive members meeting in London. December the 5th is the FX Hive members meeting, also in London. And looking forward to 2025. It's CMX 2025 on Thursday, the 3rd of July, 2025, back at the Woolwich Works. Remember the Woolwich Works from those heady days earlier in summer 2024. Join us again on Thursday, the 3rd of July, 2025. And if you want to find out more about any of those, head on over to the-cmx.com. But that's all for now. From me, David, from our guests, Richard and Ray, and from all of the CMX production team. Thanks for joining us. Until next time, bye-bye.